Friends, hello and welcome. In this video, we'll be discussing some of the concepts of TDS with reference to GST law. This means this is not income tax TDS. We are discussing about GST TDS. And in this context, we'll be also talking about the roles and responsibilities of DDOs, that is drawing and disbursement officers of various government departments or government entities. So let me share my screen with you right now. Give me a second for that. Yes, friends, I think screen is visible. And many of you must be aware that this provisions of GST is already there in Income Tax Act since long. It was initially introduced under Income Tax law. And under this method, what happens? Tax is collected initially on an ad hoc basis. Under Income Tax law, what happens? The payer of income deducts tax from the recipient. And whatever tax is deducted, it is shown in the credit of the recipient. And the recipient can use that credit in adjusting his tax liability. And the same concept is also there under GST law. In GST law, you know, there is a concept of supplier and recipient. Supplier supplies goods or services and recipient receives it. And recipient makes a payment. And here there is an obligation that recipient has to deduct tax at source whenever he is making payment to the supplier. And these provisions are there under CGST Act section 57, sorry, 51. Section 51 talks about these provisions of the GST. And these provisions are applicable only from 1st October 2018. From this date onwards, these provisions are notified. So the TDS under GST is applicable with effect from October 1st, 2018. These are the basic things we are aware of. And now let us first of all learn who are the persons liable for tax deduction at source. First of all, please appreciate that not everybody or not every registered dealer is required to deduct tax at source. Only, you see, these are the category of persons, 7 category of persons who are notified. So taking into consideration of the provisions of section 51 of CGST Act as well as the notification, the 7 category of persons are responsible for tax deduction at source. Let me read it for you. First of all, a department or an establishment of central government or state government. So all central government departments, state government departments are required to deduct tax at source. Next, local authorities like municipalities, panchayats, NSEs, they are the local authorities. All government agencies, they are also responsible for TDS. Then an authority, board, or any body set up by an act of parliament or state legislature. That means it may be a central body or maybe state level body. And it says when the government has 51% or more participation, the government should be holding 51% or more. Government should participate in 51% or more in by way of equity. Government might holding equity shares. It says equity or control. That means without holding equity share, also government may control. Let us say government is controlling the composition of board of director of that board or that body. In that case, also government is controlled. So if the government has 51% or more participation by way of equity or control, then they are coming under the category of person who are responsible for deduction of TDS. Then point 5 is any authority, board, or any other body established by government. If government itself has established any authority, board, or anybody. When government has 51% or more participation by way of equity or control. In this case also, government has established some authority, body, or board. Those authority, body, or board are also responsible for deduction of TDS. Point 6 is society established by central government or state government or local authority under Society Registration Act 1860. So these kind of societies which are established by central government or state government or local authority, they are also coming under the category of person who are responsible for TDS. And lastly, PSUs, that is public sector undertaking. Public sector undertakings. So these are usually 7 category of person who are liable for TDS. And if someone is not coming under this category, then TDS provisions under GST law is not applicable to them. Please have a look at this. Now let us move further. There are some additional points also at this point. Let me draw it to your attention. These provisions are also applicable to Ministry of Defense only in respect of some specified goods which are there in this notification. If someone is interested, you can refer to this notification number 57/2018 of October 23rd, 2018. One can find out which are the instances where this provision is applicable to Ministry of Defense. This is not applicable for where a supply of goods and services is made from one PSU to another PSU. In this case, it is not applicable. Okay, this is one more provision we have to keep in the mind. And these provisions also not apply to certain supply of goods and services which are listed in section 51, subsection 1. That also will be learning later on. So these are the few things just keep in the mind. Now let us move further. First of all, let us talk about what is the rate of TDS. If you know we are liable to deduct TDS, we need to know what is the threshold limit, in which situation tax is to be deducted at source, and what is the rate. If you look at this slide, it says that the rate is 2%. 2% of the payment made by the supplier. Okay, payment made to the supplier by the recipient. So recipient makes payment. So when recipient is making payment, he has to deduct 2%. 2% means 2% IGST. IGST is applicable in case supply is an interstate supply. So in case of interstate supply, IGST rate is 2%. If in case it is an intrastate supply, then instead of IGST, many of you must be aware, CGST will be levied as well as SGST will be levied, and both 1%. That means CGST 1%, SGST 1%, both taken together 2%. Right? So intrastate supply, CGST 1%, SGST 1%. Interstate supply, IGST 2%. This is the rate of TDS. And when it is applicable, it is deductible only when the total value of supply under a contract exceeds 2,50,000 rupees. So there should be a contract. That means under a single contract, the value should exceed 2,50,000. If it is up to 2,50,000, the TDS requirement, TDS tax deduction requirement, TDS liability doesn't arise. But in case it exceeds, then liability arises. And it says under a contract. Within the contract, there might be multiple supplies or multiple payments. On each such supply, tax is required to be deducted. For example, let us say there is a contract for 5 lakh rupees. 5 lakh rupees exceeds 2,50,000. So that means TDS is applicable even if under that contract, let us say there are 5 supplies and each supply is 1 lakh rupees. So each individual supply is within 2,50,000, but total contract value is exceeding 2,50,000. So therefore, you have to see the total value of the contract. Since in this example, total value of contract is exceeding 2,50,000, TDS liability is there. So whenever payment is made to the by the recipient to the supplier, he has to deduct tax at source. So I repeat, the individual supplies may be less than 2,50,000, but if the contract value is more than 2,50,000, TDS provisions will be applicable. So you have to see the entire contract value, total contract value, in order to decide whether provisions are applicable or not. Now let us move forward. Let us see an example here, and on which amount TDS is to be deducted. Let me explain it with the help of an example. Let us say X Limited is a supplier of goods and the recipient is a government agency. Since it's a government agency, so TDS liability is there. And the taxable value of the supply is 10 lakh. So 10 lakh means 10 lakh before GST. So if you apply GST at the rate of 18%, so GST amount comes to 1,80,000. So total amount you see, it comes to 10 lakh plus 1,80,000, it comes to 11.8 lakh. So in this case, TDS has to be deducted. Here you have to appreciate TDS has to be deducted, or tax has to be deducted on the base value or the taxable value. That is on 10 lakh, not on 11.8 lakh. Okay. To explain it, let us see this table. Here you see the value of the supply, let us say 10 lakh. You can look at here. GST is 1,80,000. Total value is 11,80,000. This may be mentioned in the bill. And the recipient, what the recipient will do, recipient will deduct tax at source at the rate of 2%. The 2% of Let us say this is an interstate supply. Okay, that means IGST will be deducted. If it's interstate supply, so 1% CGST, 1% SGST will be deducted. 2% of or 1% each of this 10 lakh rupees. So here you see 20,000 rupees deducted. So effectively here payment will be 9,80,000. GST amount will be fully paid. Okay, now total amount that will be released by the recipient is 11,60,000. That means 11,80,000 minus 20,000 GST, 11,60,000 will be paid. This is the concept. I think this concept is clear to you. Let us move further. Now, one important thing we need to understand at this stage, there are few situations, and this is one of the situations where TDS is not required to be deducted even if the contract value is exceeding 2,50,000. It is important for us. First, look at this chart or look at this picture. It will explain you. In this situation is that when the location of supplier and the place of supply, you see these two boxes I'm talking about. Location of supplier as well as the place of supply is different from the state of registration of recipient. Who deducts TDS? It is the recipient. If the state of registration of recipient is different from location of supplier as well as the place of supply, then this TDS provision is not applicable. Let me repeat it. TDS provisions are not applicable if the location of the supplier and the place of supply is in the state or union territory, which is different from the state or union territory of the registration of the recipient. That's what I told you. So you have to keep in the mind, where is the location of supply? Where is the place of supply? Is it different from place of registration of the recipient? If they're different, then this provision is not applicable. Let me show you an example here also. Look at this table. Here you see this column I'm showing location of supply in the second column. Third column I'm showing the place of supply. Fourth column I'm showing the registration of recipient. Then we are talking about TDS applicable. Here you see in the first case, all are state A. That means location of supplier, place of supplier, registration of recipient, all are in one state. Okay, it is an interstate supply, so TDS is applicable 2%, CGST 1%, SGST 1%. Second case, you see location of supplier is A, place of supply is B, registration of recipient is A. I told you location as well as the place of supply, both should be different from the registration of recipient. Here only one is different, other one is same. Therefore, TDS is still applicable. This is again an interstate supply. So this is an interstate supply. First one was interstate supply. So TDS is applicable 2% IGST. Third case is relevant for us. Here you see location is state A, place of supply is state A, but both of them are different from the state of registration of recipient, which is state B. In this case, TDS is not applicable. TDS is not applicable because it involves some kind of complexity to deposit TDS. You know who deducts TDS, and this case, you know, this is an example of interstate supply. Sorry, intrastate supply. So CGST and SGST will be charged. The supplier is charging CGST and SGST, and recipient is in different state. So it will be different. It will be difficult for the recipient to deposit CGST and SGST of the supplier state. Okay, because you see, GST registration is a state-wise registration. Every state you can have registration. So if you're registered in the state of Odisha, then you can deposit only OGST. You cannot deposit Chhattisgarh GST, or you cannot also let us deposit Telangana GST or Andhra Pradesh GST. So it will be difficult for the recipient to deposit GST, CGST or SGST of a different state. So therefore, this, in order to avoid that complexity, law has provided that in this case, TDS is not applicable. I believe this is clear to you. Let us move further now. Now you see, again, I'm showing you 10 instances where TDS is not required. First of all, you see, when the total value of taxable supply is not exceeding 2,50,000. You are aware of this, right? Second case, the contract value is more than 2,50,000, but the contract consists of both taxable as well as exempted supply, right? And the value of this taxable supply is less than 2,50,000 or 2,50,000. That means taxable supply is values, taxable supply values is not exceeding 2,50,000. In this case also TDS is not required. Second, if the supply covers exempted goods or exempted services, GST department issues notification for certain goods and services which are exempted. In this case also TDS is not required. There are certain goods or services on which GST is not levied, like some goods are there, petrol, diesel, petroleum crude, natural gas, etc. Here also TDS is not applicable. There are certain services which are provided in Schedule 3 of GST Act. This schedule talks about certain supplies which are neither supply of goods nor supply of services. For example, supply of services by employer to employee. Sorry, supply of services by employee to employer. In this case, also TDS is not required to be deducted. And when the tax invoice is issued before October 1st, 2018, before this section was notified, then also this TDS is not required to be deducted. Then when amount was paid in advance prior to October 1, 2018, and tax invoice has been issued on or after October 1, 2018, here also TDS is not required to be deducted. Point 8 is that tax is to be paid on reverse charge mechanism. When recipient is paying tax on behalf of the supplier under RCM, they are also not required, TDS is not required to deduct it. And next thing is that where payment is made to an unregistered supplier. So unregistered supplier is there also TDS is not required to deduct it. And where payment relates to cess component, right? So here also TDS is not required to be deducted. Just you can have a look at this 10 points where TDS is not required to be deducted. Now, quickly let us cover the next part, that is registration. So, if the DDOs of government departments are required to get that entity or get that department registered under GST law, when they have a liability to deduct tax at source. So, TDS director has to compulsorily register itself without any threshold. So normally you see under GST law there is a registration limit. There is a limit beyond which only when the value of supply exceeds you are required to register. State specific limits are there. Some states 40 lakh, some like 20 lakh here. But if TDS liability is there under GST law, there is no threshold limit. The DDOs of the tax deductor is required to get themselves or get that entities registered under GST law. Now, in this case, the deductor has a privilege of obtaining registration even without PAN. So, GST is a PAN-based number. If you want to register yourself, first of all, you are required to have your PAN. But here it is possible to get registered without PAN number also, if you are having a TAN. So, many government departments, they do not have PAN card because they do not have any taxable income. So, they do not apply for PAN card also. But they have not be having PAN where they are required to deduct tax at source under Income Tax Act. So by using that TAN, one can apply for registration. If you look at the screen, that is the screen of GST portal, www.gst.gov.in, if you visit, if you apply for registration, under new registration, you see there is a provision. One can apply as a tax deductor. If someone is applying for registration as a tax deductor, then PAN is not required. Without PAN also, it is possible to get yourself registered. Now, next point is that once a DDO knows or an entity knows that tax has to be deducted, it deducts. Then whatever is deducted, that is required to be deposited in government. So after registration, we'll be able to create challan and deposit it with government by 10th of the succeeding month. Suppose tax deduction is made in the month of, let us say, October. By November 10th, this money has to be deposited. If the deductor fails to pay, then he has to deposit with the interest. He has to pay interest for that. So this date also DDOs have to remember. By 10th of the succeeding month, they have to deposit whatever tax is deducted at source. After depositing, the DDO's responsibility is not over. He is required to issue a tax deduction certificate. This certificate will be generated in the form of GSTR 7A. This will be issued by the deductor to the deductee. When it is to be issued? Issued within 5 days of crediting the amount to the government. After depositing the money with the government, within 5 days, this certificate has to be issued in the form GSTR 7A. In case the certificate is not issued within the time limit, the deductor, or here in case the government department DDO, is liable to pay a late fee of 100 rupees per day. But thankfully, there is a cap on this. The maximum amount is 5,000 rupees. So 100 rupees per day or 5,000 rupees, whichever is maximum, whichever is lower, that amount is to be paid. So late fee is 100 rupees per day, but with a maximum limit of 5,000. It cannot exceed 5,000 rupees. So DDO's liability is limited to 5,000 rupees. Okay. Now, one thing is the deduction, second is TDS certificate, and second thing is deposit, third is TDS certificate. Then one more thing, that is after all these things, TDS return has to be filed. The deductor is also required to file a return. This return is filed in the form of GST 7, and this return has to be filed within 10 days from the end of the month. From the end of the month, this return has to be filed. Okay, this return, the detail of tax deduction will be provided in this return. And once the return is filed, the return data will be reflected in the GSTR 2 of the supplier. Supplier can see that this much of tax is deducted at source. And whatever money is deposited and return is filed, that is also reflected in the electronic cash ledger of the supplier. I repeat, electronic cash ledger, not electronic credit ledger. So supplier will be having two ledgers. If he is registered, electronic cash ledger, electronic credit ledger. All input credits will be available in the electronic credit ledger, but this TDS will be reflected in the electronic cash ledger. And this electronic cash ledger balance can be used by the supplier for payment of taxes as well as for settling other liabilities. So this is the impact of TDS return. Now we'll have a look at the consequences of defaults. If TDS is not deducted, then there is a consequence of interest. Interest will be paid or it will be collected by the government as per its own mechanism. If TDS certificate is not issued, there is a late fee of 100 rupees per day, maximum rupees 5,000. If TDS is deducted but not paid to the government, again interest liability is there. Then rate of filing of TDS return. If there is delay in filing TDS return, then late fee of 100 rupees per day. Again, maximum is 5,000 rupees. These are the consequences. And this interest rate is normally 18%. Just keep it in mind. Now, one question might be coming to your mind. In case some wrong amount is deducted or amount is deducted erroneously or deposited erroneously, can refund be claimed? The answer is yes. Any excess or erroneous amount deducted can be claimed as refund, but in case it is already credited to the electronic cash ledger of the supplier, then refund is not possible. Once it is credited to the cash ledger of the supplier, then supplier can use it. Refund is not possible. Okay. Now, finally, let us summarize the role or responsibility of the DDOs with reference to TDS under GST law. First of all, DDOs are responsible for registration. If TDS liability arises, they have to get themselves registered by using their PAN or TAN as the case may be. Then whenever a contract value exceeds 2,50,000 and TDS is applicable, DDOs are responsible to deduct tax at source. And whatever is deducted, they are required to be deposited by 10th of the succeeding month. They have to deposit it. Okay, once they are registered, they can go to their portal and create a challan and deposit this tax deducted amount. They are also required to issue certificate within 5 days of crediting the amount. And also they are required to file return within 10 days from the end of the month. These are the 5 types of responsibility which needs to be discharged by all DDOs. Well, friends, I think we have covered all the important concepts. Thank you very, very much. Thanks a lot.